Imagine a contract that runs itself. No lawyers, no middlemen, no trust needed. Pay automatically when conditions are met. Lend money globally and earn interest instantly. That's the power of smart contracts on Ethereum, the #2 cryptocurrency and the foundation of DeFi, NFTs, and more. In March 2026, Ethereum hosts over $50 billion plus in DeFi TVL, plus massive L2 growth, gas fees as low as 10 to 20 cents thanks to upgrades, and Layer 2 networks like Base, Arbitrum, Optimism processing most transactions. In Video 5, we dive deep. Smart contracts explained, the merge to proof of stake, scaling with Layer 2, key upgrades like Dencun and 2026's Glamsterdam and Hegotá, and why Ethereum powers the decentralized web. Let's explore the programmable blockchain. Recap so far. Video 1, Origin of Crypto. Video 2, Blockchain Mechanics. Video 3, Types Overview. Video 4, Bitcoin Deep Dive. Now we move to Ethereum, the blockchain that added programmability. Over the next 10 to 12 minutes, 1. What Ethereum is and why it's different from Bitcoin. 2. Smart contracts, self-executing code explained. 3. DeFi, real-world applications. 4. The merge, from energy-hungry to efficient POS. 5. Scaling crisis and Layer 2 solutions, Arbitrum, Optimism, and Base. 6. Key upgrades, Dencun, Pectra, and 2026 roadmap. 7. Why Ethereum still leads in 2026. Let's start with the basics. Ethereum launched in 2015 by Vitalik Buterin. It's a decentralized computer anyone can program. Unlike Bitcoin, mainly digital gold or store of value, Ethereum runs smart contracts, code that automatically executes when rules are met. Core features: Turing complete, can run complex apps. Native token, ETH, for gas fees and staking. March 2026, massive ecosystem, 8.7 million plus smart contracts deployed, dominates DeFi, stablecoins, and RWA. Why it exists? To build a world computer for decentralized apps or DApps, finance, gaming, identity, without trusting companies. Analogy? Bitcoin is a global calculator for money transfers. Ethereum is a full smartphone running apps on blockchain. Smart contracts are self-executing programs stored on blockchain. How they work? Written in Solidity, compiled, deployed to Ethereum address. Once live, immutable and unstoppable. Simple analogy, think of a vending machine. Insert money plus select item equals machine checks plus dispenses automatically. No cashier needed. Real example? DeFi lending protocol. Deposit collateral equals borrow stablecoins equals if price drops, auto-liquidate to protect lender. All code enforced. Benefits: trustless, transparent, global, 24/7. Downsides: bugs can be catastrophic, for example, past hacks. Gas fees, but dropping. In 2026, millions running DeFi, NFTs, DAOs, billions in value secured by code. DeFi, decentralized finance, apps on Ethereum replacing banks. Examples: lending, compound, earn interest by supplying assets, DEXs, Uniswap, swap tokens without intermediaries, yield farming/staking. 2026 stats: Ethereum mainnet plus L2 DeFi TVL around $50 billion plus. Stablecoins dominate settlement around 60% plus volume. RWA tokens on Ethereum leading. Analogy: traditional bank versus DeFi ATM. Open to anyone, no KYC for basics, higher yields but higher risks.
The merge, September 2022, switched Ethereum from proof of work, like Bitcoin, to proof of stake. Before, energy-intensive mining. After, validators stake ETH, around 37 million staked in 2026, around 33% supply, randomly selected to propose or validate blocks. Impact, around 99.95% energy reduction, greener network. Security via economic stake, / for bad behavior. 2026, staking yields around 3 to 4% APR. Institutional staking growing.
Mainnet issue, high fees / slow during peaks. Solution, Layer 2 scaling. Rollups, optimistic / ZK, process transactions off-chain, settle on mainnet securely. Top L2 2026. Arbitrum, DeFi leader. Base, fastest user growth, Coinbase-backed. Optimism, infrastructure focus. Together, process most transactions, TVL surging, consolidation, Base / Arbitrum / Optimism dominate. Dencun upgrade 2024, proto-danksharding / blobs, cheap L2 data posting, gas fees dropped 90% plus to 10 cents to 20 cents. Analogy, mainnet is highway, L2s are express lanes.
Recent is Pectra in 2025, improved staking efficiency. 2026 is Glamsterdam in the first half, with parallel execution, better account abstraction. Hegotá in the second half, with further scaling and decentralization. Longer term is full danksharding for massive throughput. This results in Ethereum evolving to handle global adoption, DeFi, RWA, and institutional use. Despite competition, network effects, most developers and apps, institutional inflows, ETH ETFs, dominance in stablecoins, DeFi, and RWA. Ethereum is programmable settlement layer for the future Internet of Value.
Today, smart contracts, DeFi, merge, L2 scaling, 2026 upgrades. Next video, 6, practical guide, wallets, buying, selling safely in 2026. Like, subscribe, comment, Ethereum power. See you soon.